Welcome to the Crypto Rocket Show. My name is Alex and I will be your host. I am the CEO and co-founder of Gains Associates, a decentralized VC that allows you to contribute to seed rounds and private sales. Today we will talk about data, and we have three wonderful guests that will introduce themselves in a minute. I guess let's just start. Shiv, present us full data if you want, maybe kind of your background, because you were also working in data before.
So I'm the author of a couple of books, one on economics, one on terrorism. I was an investigative journalist for about a decade. I was at The Guardian during that time period when they were, breaking WikiLeaks and the Snowden stories, which were kind of influential on me, and Cambridge Analytica as well. Then I joined the Web3 space in early 2017, just the beginning of that other bull run, which I think most people remember if you've been in the space long enough. Very reminiscent of what's happening now. I joined Golem for about 6 months as a comms advisor, and then I was at a project called Streamer for about 3.5 years, and they were working in real-time messaging. And it was there where I was the kind of co-creator of the kind of data unions framework. Pretty much almost this time last year, I started Pool Data. We're now at 13 people, and the idea is that we build infrastructure for data unions. All right, that sounds cool. I mean, I guess we'll have to dig into data unions because there's probably some explaining to do here. Yeah, basically, a data union is an organization. It can be a DAO as well that helps you aggregate your data. So it says, look, hey, join, and you can share, your clickstream data in a browser plugin, or if it's a mobile app, sensor data from your phone or location data, or, maybe it's just a landing page that helps you connect to your banking data. All these other companies are kind of selling it. And you're not getting a cut. But if you join a data union, they'll help you monetize that data and share that value back with you. Got you. Max, if you want to go, and obviously, actually, there might be interesting synergies between you guys, sharing some data.
My background is really a career mixing technology and supply chain. I spent a lot of time at DHL, looking after the Asia Pacific region for the top consumer retail accounts. And that really took me deep into some of the world's largest supply chains by volume, which are consumer goods supply chains with Nestle, Unilever, Colgate-Palmolive, Adidas, Nike, and really understanding how those big brands distribute products to emerging market consumers with increasing disposable income. Really, the future of consumption is in these markets. Understanding how inefficient those markets are, not just in terms of general capital inefficiency and ability to generate revenues for the brands, but also for the people that live inside those supply chains. My first startup was OpenPort, was about delivering visibility solutions to these very large brands in countries from Pakistan into India, Philippines, and Indonesia. Now we're tackling a different and I think a bigger problem, which is not visibility, but really predictive demand for most of the consumers in the world who are in these markets. The key business problem is that sales are still primarily offline. The data is not captured for the majority of transactions in these markets, and that means that the brands don't know exactly what to make and what to produce, and also that these supply chains cannot be financed, which creates really a over $1 trillion trade finance gap. So getting that data is our mission. We do that through the first tokenized and decentralized point of sale app, which I'm in Philippines to launch next week. And we then allow anyone that works in the retail sector to monetize their data. And we optimize the yield of the value of that data so brands can pay market value for it. And also fintechs and banks can pay what they want in order to get the insights they need to credit score and finance inventories and purchase orders and so on. So we're really solving real world problems for hopefully over 1 billion people, and looking at data infrastructure techniques, including tokenization, to bring that data to market and build a very large and dynamic ecosystem that helps people and helps the supply chains to be more sustainable and profitable.
Got it. Cool. All right, then we have Brandon from Covalent.
Hey, how's it going? So I started my data journey, I guess, also back in 2017 with a data company in the oil and gas sector, actually. So we were forecasting wellhead production volumes. I spent a few years before that working as an engineer in the oil and gas sector. And eventually that transitioned into academic research in the fintech sector, and from there went to Web3. So I've been working in research and with a main focus on communicating the data. So visuals, articles. I wrote an ebook on GameFi a couple months ago. So the main focus that I've gone after is really visualizing and communicating this data. So I lead the research team at Covalent here, and what we do is serve a unified API to about 25,000 developers over the world. And we index 32 blockchains and serve all of that through an API. So balances every transaction, every log event, essentially everything that happens on these 32 blockchains is served through the API. And behind the scenes, I have, SQL access to that to conduct this research.
Got you. I mean, for starters, we are actually using your API with Gains because we do have like a data analytics division, and it's been very helpful. We've tried a few others and Covalent has been the best so far. And I mean, there is really super interesting insights you can do with on-chain data. I mean, it is a database, an open database. It's kind of unprecedented in history. Data is cool, right? And I mean, in the real world, it's like super big. But in crypto, it still feels like there's a lot of explaining to do. And the data project, I mean, I guess Ocean is the biggest one, but it's not that big considered in the rankings, right? So I'm not sure what you guys think, maybe why data might be kind of lagging behind in crypto.
If Web3 has one failing, and again, maybe kind of the events of this week is kind of highlight that, we're very good at talking and building for ourselves, but not necessarily great at kind of reaching out, right, to the rest of the world and what they're doing. We'll get there, I'm sure. When we talk about data in Web3, we're usually talking about crypto data. So Ocean has been one of those projects that's actually tried to bring in data sets that are not blockchain specific. And, this is ultimately, I think, what, Pool and the ecosystem of sort of data unions are intending to do in two stages. So we're talking about now personal data that people generate. Maybe it's wellness data from a watch or some of the other examples that I gave earlier, or, other IoT objects, right? There's a lot of data out there, but you have to kind of port it into the Web3 system, right? In many ways. A lot of this data is locked up with Google and Facebook and the big Silicon Valley companies. So the first stage of it is just sort of getting these data unions off the ground, if you want, and creating those applications that can then open up and de-silo that data and make it available to just a multitude more people, often in real time, right? People want it on via API, not via static files. And then I think the second great shift at this moment that's coming, it hasn't been much talked about because Europe is in July finally passing into law the sort of very last stages of what's known as the DMA, the Digital Markets Act. And in that is a provision that says any European, 450 million Europeans, now going to be able to port their data from Google, Facebook, Microsoft, Apple, and Amazon in real time. And that will take an effect by March 2024, which is absolutely huge, right? So now you can port your data into a data union, have the same kind of insights as Google or Facebook in a sense delivered to that ecosystem. And I think that's when, you start to see then, interoperability between apps, and Web3 can now compete on that basis with that flood of data, right? It starts to get powered by all of that.
So March 2024, you're basically telling us we have to wait 2 years, which might coincide with like the bull market, who knows, before things really take off for data.
I mean, you're saying wait. I mean, from our perspective, it's like, God, that isn't enough time to build out everything we need to then really capitalize on that moment. Not just from Pool's perspective, but, all these other data unions need to scale. So come that date, let's say it's March 1st, 2024, we can advertise to 450 million people and say, look, just a couple of clicks, port your data out of Google, finally. Right? You can control it. And then you can start to do really, really amazing things. And probably this answer is a bit too long, so forgive me. But you can start to port this stuff into personal data wallets, right? So sign on with Ethereum has been, I think people are noticing how powerful a protocol that is, right? Well, soon with data wallets, you'll be able to sign in, pay for stuff, but also store your data in the same wallet that you keep your crypto in. And soon that will become, not your keys, not your data as well. And I think that's really the new frontier of all of that.
All right. Anyone else wanted to add something?
Yeah, I think something that's been interesting and inspired us is the success of play-to-earn models like Axie, for example, in Southeast Asia. It inspired us to really move into share-to-earn. So I think some of the concepts around interactivity with micro incentives are relatively new, and the technologies to support that in Web3 are relatively new, and that's allowing these new models to come forward. We're really piggybacking on, in some ways, on top of play to earn with what we think is a more useful and sustainable concept in terms of how the data goes back and is used for broader ecosystem improvement. But I think some of those concepts are quite new, and linking more sophisticated data use cases into them is now becoming possible in a way that wasn't before.
Got you. London, yeah, if you want to go. And also, I had another question for you after. I'd be very curious if you have a few examples you want to share with us of analyzing the data on chain, maybe something recent, right? I mean, how the money flows, whether we can, predict the markets using gas fees or any weird thing like that.
I just want to revisit that first question. Why hasn't the data business really taken off? Why is it not super prominent in Web3? I think the answer is read scalability. Actually getting the data from blockchains, it's not easy, right? It's purported to be public and, basically free to get, but it's not. You have to run a full historical node, and then you have to try and extract all of that data out of that node. And to do so in near real time is extremely difficult. So at Covalent, we're building a network, and we have this network of operators that extract block specimens, is what they're called, from these full historical nodes. And then they publish proofs of these to a proof chain. And so it's actually verifiable data extracted from 30 plus blockchains. We'll go on to serve that data through the API. So then we have a distributed network of operators serving all of the data and indexing all of the data behind the API. And you mentioned before how easy it was to get data from Covalent. And I think that's really the main objective here, is to build a community of data nerds and just give them access to this data and go nuts, right? You should have access to this data. It is freely available if you know how to access it, and we do, so we pass that off. I've written a bunch of articles. I think the one that hit home the most was actually in November. My team and I, we were researching Axie Infinity, and it was like all the rage back in November. We noticed that breeding had significantly decreased, right? Breeding retention specifically. So people that bred Axies the month prior had stopped. There was only a 5% retention, meaning 95% of people that were previously breeding Axies had started extracting value and selling their SLP instead of breeding. So we wrote an article about that and questioned the sustainability. And then sure enough, the next 3 months, what happened in the next 3 months. So I think there's things like that where you actually can look at fundamentals of not just crypto data, but actually what's happening, who's doing what, who's breeding, who's playing games, who's extracting value, where is that value going? There's so much data, and all of it is actually served through the API. And my team serves to try to distill that information and analyze it, because I don't really think data has intrinsic value until it has been properly analyzed and condensed down into some point. Then it has value. That's what our team is trying to do here.
I had another question, which was on the business side. Do you guys have estimations as well of, how much you can cut on costs or how much more money you can make when you have access to this kind of data?
I think there's two targets that we have. First target is the brands, and then the second target is the retailers and the people that work in those supply chains. When you look at the brands in mature markets like the US, which are increasingly Amazonified, Colgate, Palmolive, for example, would have a case fill rate, which means the percentage of orders that they get from their distributors that they can fulfill in full. It's in the high 90s, around 97%. Pakistan is below 80%. So that's how significant their lost sales is. So that's on a $50 million US dollar year business. So you've got easy 20% lost sales. And also the margin is considerably worse in these markets. Plus there's a lot of working capital tied up. So those are kind of some easy metrics. When you talk about the small retail business, they're really constrained by lack of working capital and unsold inventory. We can see that you can essentially 3x the EBIT of the small business and free up a third to a half of the working capital that's tied up there, and then have somebody that's making $100 a month or $200 a month and put an extra 50 in their wallet with data monetization and share to earn. So that's a big impact for the little guy and also for the big companies.
So if I was going to hop in and answer that question as well, I'd say, look, the data economy as constituted is really very screwed up, right? And anyone who's kind of mildly reading the tech press, they'll notice that every time a data broker usually gets mentioned, they suffer consequences. That's because the data market for personal data, it's all done in sort of shadow markets, right? Under the table, right? They don't like to advertise what they do because they're embarrassed or they're breaking laws in some cases, right? Privacy regulations in Europe, because they've collected that data in all sorts of kind of nefarious ways. That's got a real impact on the sort of sales cycles and how fast data shifts around. It's not too dislike, if you were kind of in Colorado 15 years ago and you're trying to buy weed versus now, right? In many senses, it's all a kind of a shadow market at the moment. Everyone needs their fix of data, whether that's, huge enterprise brands or even, medium-sized businesses. They all need data to fuel and power what they're doing, but they don't know how to get it in any kind of ethical way, right? When they go shopping for data, which is itself really difficult because obviously these people don't advertise, these data brokers, and there's something like 290,000 data brokers just in the EU alone. And they're making 84 billion in revenue, so it's not a small amount of money by any means. When they go shopping for data, that's already really difficult. And then, of course, when they turn to buy it, they have to go through this really laborious sales cycle because they want to know, well, look, where did you get this from? And no one wants to say. As soon as you now turn that into the light and you say, look, this is from a data union, this is from, ultimately garnered from people who want to actually share this information, right? And are happy to do so, right? In a pseudonymized or anonymized way. Then that speeds everything up. And that's where you're also saving vast amount of time and expenditure and wasted opportunity costs.
I think just to add on to that point as well, one of the biggest issues with crypto data is actually how anonymized it is. I don't even know if the address that I'm interacting with, I don't know what country they're in. I have no contextual information about them. And so that's one of the most interesting pieces that I'm seeing here with the data unions is actually it can still be anonymized, but adding some context to the blockchain transactional data would be really interesting. And with the thesis that blockchain and DeFi really propagates into the traditional world, the joining of these two elements of anonymized personal data and your blockchain financial life, that would be huge for adoption because now we can have more targeted and more focused efforts instead of just running around with completely anonymized data. We can actually make use of people that want to share their data, and that'll really help the space, I think. So that's really interesting to me.
Brandon, look, you're absolutely right. And the question is, can we really stick to our decentralized principles, right? Whilst kind of retaining all the benefits that you've just outlined, right? Or accelerating towards them, right? How do you know someone is a human? And how do you know someone is who they say they are, right? It goes back to that very old kind of New Yorker cartoon from 1992. No one on the internet knows you're a dog, right? We're still trying to solve that problem. And I think that, that idea of the data wallet that I outlined, it's a really old idea, right? Being able to have a personal data vault and even amalgamate that perhaps with a crypto wallet. Just very recently, literally in the last couple of days, Vitalik and Glenn Weil, they wrote a really great paper on soul-bound NFTs. And in that, they talk about, again, this kind of data wallet. I think that's the new frontier where you can actually have your data stored and it's coming from a data union. So it's well structured already. It's well governed because that's usually been the problem, right? People can't fill this up themselves because it's just a mess from an ecosystem point of view. They say, right, I'll join a data union and then I'll copy and paste that data into my data vault. And then you're in control. But then you can turn up and you can say, right, well, if I need to get KYC, fine. Conveniently, you can read this data in a zero knowledge way. And then you can verify that you're human. I think that kind of that identity solution Lots of people are working on that identity solution, but mixing it together with that crypto wallet is the way forward.
For sure. I was curious, Brandon, on kind of another topic, if you ever took a trade thanks to some data analysis, or if it would have been possible, maybe, I don't know, checking the influx of volume to exchanges or of things like that.
I mean, yeah, it's definitely possible. I have 62 billion rows of data from 30 different blockchains that shows me everything that's going on. Trading off of that information, I mean, there's not a whole lot of interest on my part there. I really actually like disseminating that information, analyzing it and moving it or passing it off to a broader audience so that we can push the entire space forwards. But yes, there's definitely a data imbalance, but also all of this data is served through the API. So given enough amount of time, this data is free and open. There's not really an information imbalance there to trade off of. So yes, maybe right now there is, but the hope is that in the future there isn't.
Cool. I mean, I don't know if you guys want to bring any topic up. Could be interesting. If you want to quickly touch on Luna and what happens, if anyone followed.
Maybe it goes back to that point about, again, I think there's some sort of reckoning here. And we've been through this before, going back to kind of at least my own personal experiences in 2017, which is, who are we building for? If we're way too insular and we don't look outward and we get far too hubristic, and Do Kwon is sort of epitome of someone who's just so hubristic, it's not even
so
a joke.
Arrogant, right? The tweets that are coming back.
Right. And just even 5 days ago, he was dismissing this whole notion of UST depegging as, people who were just, it's the complaints of people who are poor, right? Have fun staying poor is usually the retort. This is what I love about people like Vitalik. He has intellectual integrity through and through. He's honest. He's humble. And just look at how little he's made, right? If you think about it in percentage terms. And how he structured the Ethereum Foundation almost right from the get-go. It's people like Vitalik that should be a kind of guiding lights in all of this, right? People who are not out to make money, but public goods, right? This isn't about getting rich. It's about public goods. If we don't do it right, we know what's going to happen. It's that threat of very centralized regulation that will step in. So we kind of have to do two things. One is be intellectually curious, yes, but not hubristic when things go well, because we should all know that things will go badly. These are cycles that we live in, and they're really speeded up for crypto. And then the second thing is build outwards, right? A lot of what we've seen so far, the use of tokens themselves, NFTs, DeFi, it's about building for people with crypto, right? We've got to start up thinking very seriously about how we build for the rest of the world who isn't in crypto, right? What are the services and digital applications that we can actually provide those people with? I think that's what and I really like hearing what Max is talking about in that regard as well. I don't want to knock what Brandon's doing because it's also incredibly important for blockchain infrastructure as a whole.
Yeah, if I could chip in, I think crypto and DeFi structures are important. Clearly, there's a need for more investment in that space. But we've got to cross over to non-crypto people. And then you really get into this whole concept of trust. And a lot of the problem that we're trying to solve as a company, it's not just missing data, but it's also lack of trusted data. And that needs to be resolved. And if people don't trust crypto, and it varies from person to person, business to business, country to country, it inhibits our solution. So, and there are features that we can put in around what we're building out that do enhance trust. Where you can see that a retailer, for example, isn't fraudulently recording transactions just to game the system, or to make transactions that are absolutely false, and you can really have a degree of traceability. But this is a big issue, what happened with Luna. And it's going to turn off a lot of people. So as an ecosystem, we've got to improve and build that trust out and make sure that it's a goal so that you can really cross over to the billions of non-crypto users that are still out there.
Just to touch on that a bit further, I think the most interesting part about this breakdown is that the attack didn't originate within DeFi. And I love the tweet that said, your size is not size. and he got outsized by, it doesn't matter where the money came from necessarily. It came from traditional finance in some sense, right? Wherever it came from, it was not a DeFi flash loan attack, right? It was much bigger than that. The big money outside of the space is watching. And I think that's actually a really optimistic thing. Even if it's attacking and not contributing, those attacks ultimately are contributing, because now we can build a better foundation. That one was not as sturdy as it was purported to be. There was definitely some skeptics and some people got humbled. I think the fact that even the size of Luna and UST got outsized by people in traditional finance watching, regardless of where that came from. So I think that is optimistic in the sense that we can now build better tech and work from there. Also, I echo the point that, if these hacks and these attacks keep happening, it's not an easy road ahead.
Yeah, can I disagree with that? Just in a small sense. Look, I see the optimism, but I also want to say this, which is, the warnings about Luna UST, right, were like the attack plan was published on Twitter in November, right? And that guy obviously got directly trashed by Doe. And we've seen this before where people like reveal, weaknesses, and the builders of that technology turn around and go, oh yeah, you're just jealous. I mean, literally like, schoolboy or playground kind of retorts. That's the bit that worries me. Like, if someone says, look, your infrastructure is got a critical vulnerability, and people turn around and go, oh, look, you're just not a believer. That is not healthy, right? That is it's really deeply unhealthy kind of intellectual milieu.
Definitely.
There are basic things that we fail to understand. One of the major things, the problem with crypto overall is not the technology. It's basically the mindset. We have been into the data integration as well. We have been working since last 8 years into the distribution mechanism of a lot of projects based on Web 2 across Southeast Asia and few other countries. What Brandon earlier mentioned with regards to the problem is that there are way bigger whales outside sitting there that you think that you can outsize them with few bucks. With any sort of crypto, the biggest problem that we see right now is the distribution mechanism. That if you have specifically built any sort of protocol, or if you have built a product on Web3 or it's partially built on Web3, you have to realize that until and unless your distribution is not layered upon multiple other product structures in the market or in the global financial world or the global utility world, there are threats not only to Luna, but multiple other people. It again builds up to how you spread the equity of your particular product and how you spread the utility. In layman's language, a simple example, the idea of decentralization does not only come from the fact that it is only in the way that, can the government track me or not? But it's also like the distribution has to be decentralized, that the one particular party or a few particular parties do not hold the power to it. Now, when we talk about decentralization, the decentralization has to go in a wider prospect. We have understood blockchain in such a way that, let's say you have Solana, like you have every other layer 1, layer 2, any particular protocol, who have very big funds and VCs which are holding them, right? The distribution works in like you have 70% of your equity being shared in the top few and rest of the 30% in the retail. So eventually when the shit hits the fan, the retail obviously panics right at the moment when the bigger wallets panic. Same thing we faced with Terra. In terms of the technology, is amazing. In terms of the products, I have used many of its products, amazing. Now, with 1 million or 100,000 or 200,000 wallets, if you take your equity of the company and you distribute it out there, giving the major chunk, let's say many companies like Facebook, like WhatsApp, or all of these companies, they are so widespread in the market that they have billions and billions of users. You don't need to go out there and go head on head and say, open in the market that I'm going to destroy this protocol, I'm going to take over WhatsApp, I'm going to take over their business. It does not work like that. You have to basically use the multiple years and years grueling process and work that Web 2 has done to create that specific data and distribution model. You have to layer yourselves upon that and take actually benefit of that. If you really want to make it out there as big as them, you have to outsmart them. The kind of a business that I am into, we try and act as a bridge. But it was easier said than done. Why? Because it's very difficult to make a crypto-based protocol or a mindset to convince and make him understand that how the outside world works, exactly the same way that it's difficult for us to explain an 80-year-old that how blockchain works. If a protocol out there focuses mainly on a user-based distribution, focuses on data distribution, it is way easier for them to succeed and the chances of them are way higher.
When we transition into more of a sort of a data economy in Web3, right, as it keeps growing, these systems are going to be incredibly valuable, and we might also become hubristic. Literature is filled with those lessons for thousands of years, right? People who fall from grace all the time, and they're meant as warning. So how do we not also fall prey, or maybe even more precisely, what are the kind of the weaknesses that you're worried about in a kind of the future infrastructure you're building? And I'm happy to answer that as well if people want me to.
The biggest challenge is really applying DeFi to end-to-end supply chain. That's ultimately the big goal where we want to go, to allow improved access to capital and funding. And in order to get there, I think it's a regulatory challenge. And I think the past week may have made things a little bit slower on the regulatory side. Even they take the UAE, it's a great place to headquarter your crypto company, that's for sure. But when you get into the details of how the business is really done outside the free zones, there's still a lot of catching up that needs to happen. So I think it's going to be there, but I'm actually concerned about the regulatory challenges.
I would say combating hubris needs to be done out in the open, and that whole exchange in like the cocky exchanges and all of that, we should take lesson of that and look at the leaders. And when a leader can have that much of an influence on a project, it's not fully decentralized, right? So if we keep pushing that vision, and it is very much just a vision right now, apart from the big chains, I don't think anything is to the point of hubris resistance yet. But I think that, to me, is the biggest way forward. And we're pushing for that across the blockchain data indexing space with the data verifiability and this proof-based method, where we just have a bunch of independent operators using a patch, indexing all of these different blockchains, completely chain agnostic, and serving it to everybody, right? So there's no element of emotion in that. And I think that's one of the biggest things.
All right, guys. Thank you, everyone, for coming. It was pretty nice. Thank you, Shiv from Pool Data, Max from Libera, and Brandon from Covalent, and Towqeer as well, our friend and advisor. Yeah, thank you. Have a good day. Stay strong. Have a good day, guys.
Yeah.
Thank you.
Thank you.
Thanks so much.
Very cool session.